All right. Good afternoon, everybody. Uneducated Economist here. So, came across an article today talking about how the stock market is at a new record high, and they're trying to come up with their reasons or beliefs or some sort of excuse to why this has taken place. Now, had you been following the Uneducated Economist for any length of time, you have heard me talk a lot about the neutral interest rate. Now, the neutral interest rate is the rate when the Federal Reserve is neither accommodating nor restricting the economy. It's when they are neutral. Now, that neutral interest rate can adjust based on inflation and inflation expectations, especially if you have an extremely elevated inflation expectation. You will not only expect to pay more for the products that you are buying, but then you will also expect to get a bigger return on your capital investment. And by having this sort of expectation when you are conducting yourself, it will pull the neutral interest rate ever higher. Now, this is what we are experiencing right now within the economy. So when many people are out there saying, wow, the stock market is achieving these new highs and so unexpected considering the fear, uncertainty, and doubt that has taken place out there, most people would have anticipated the stock market going down. However, if you think about the Federal Reserve and how restrictive they really are within the economy, the neutral interest rate rising has made the economy less restricted. And this is what we are experiencing today. So counterintuitive to what most people believe out there, but if you have a lot of fear, uncertainty, and doubt, and that is being pushed out there through the mainstream media, this elevates the inflation expectation and pulls the neutral interest rate ever higher, making the economy less restricted. Literally, they are using fear, uncertainty, and doubt and pushing that into the people to essentially achieve a monetary policy that is far less restricted than anybody would have ever guessed. This is the reason why you're seeing the stock market achieving these all-time highs. Why it is that the housing market hasn't crashed like a lot of people had anticipated it doing when the interest rates had moved up. They thought that the stock market, the housing market, everything was going to absolutely crash. Unemployment was going to skyrocket. All these crazy recessionary pressures that a lot of people would have anticipated from an elevated interest rate, especially coming from the Federal Reserve, didn't manifest itself into the reality of the situation. What we are experiencing is an economy that is far less restricted than anybody would have ever guessed. And this is the reason why we're seeing the stock market achieving these all-time highs, right? Or not collapsing like a lot of people would have thought it would have going to do. And now knowing this from the very beginning, that the Federal Reserve was going to be pushing for an economy, for a monetary policy, for a belief within this environment to push elevated inflation, expectation, to push this higher. Knowing that they were going to do this ahead of time. This is what I have been trying to say on this channel for a very long time. Using the elevated inflation expectations, and for their benefit. And here it is, it's working. Sorry about that. Sorry about that, guys. The Wi-Fi keeps trying to connect up there and causes the live stream to go buggy. All right. But just to understand that the Federal Reserve knew a long time ago that if they did not get the inflationary expectations persistently pushed out there into the economy, that they would fail with their monetary policy. Understanding this is the key to understanding why it is that the Federal Reserve is sitting at an elevated position while maintaining and pushing the idea of tariffs or uncertainty or even the idea of inflation that is sneakily coming in from a distant area. I don't know how you want to describe it, but basically the fear of tariffs that are going to cause this inflationary expectation within the economy that doesn't seem to manifest itself. They are using that. Think about it. They are using the fear of tariffs. They are using the fear of inflation. They are using this expectation for their benefit. And understanding how it works and why it's going to create an environment that is less restricted than anybody would have ever anticipated is again a key to understanding why it is that the market is at an all-time high or achieving new records. I don't know how many people out there were anticipating that we would experience a recession by now. Unemployment would have been skyrocketing. All this chaos and problems within the economy should have been taking place right now. And although there is going to be a lot of people who say, dude, the unemployment is much higher and the inflation is much higher and all this stuff is much higher than what they are saying, that's cool. We can talk about that story, but we're also trying to understand how it is that they are going to be conducting monetary policy. Because understanding how the monetary policy is going to be conducted is then giving us the ability to appropriately position ourselves. Now, I know myself that I had no fear about investing into Coinbase stock. Now, I told people about it. I suggested it as far as, a place that they could add to their portfolio of stocks. I didn't suggest that anybody do it for a complete investment, but I was suggesting it as part of what I was doing. And that stock right now for my position is up 300%. I had no fear about being in it. I have no fear about being in the bond market. I have no fear about being in the gold market. I have no fear about being in real estate. I have no fear. I have no fear of any of this stuff. Because fear, uncertainty, and doubt is what they are using against you. Once you have a lot of confidence and understanding on how this strategy is being played out, it gives you a much better understanding of what it is that you are doing with your money, with your investments, with your purchases that you are doing out there. The people who live in this idea that the Fed doesn't know what they are doing, that the government is going to destroy your life, that all these chaos and uncertainties are going to keep you in a position in which that you don't move and you hunker down and you sit still and you don't do anything, while other people are out there absolutely killing it. And this is, again, how it is that they are doing this is using your fear, using your uncertainty about the situation that we are now facing. They use this against you. They use it to create an elevated inflation expectation, which pulls the neutral interest rate higher, which makes the Fed funds rate less restricted upon the economy. And this is the reason why we are seeing such resilience within the economy. Nobody's going to explain it to you this way. I am literally the only one. And this is the way that I have been explaining it for years. I have never changed my tune on this. It's because this is the accurate way of looking at it. Everybody else is misunderstanding the situation because they are literally stuck in a mindset of how it is that the Federal Reserve had conducted themselves for decades leading up to the Great Financial Crisis. After the Great Financial Crisis, everything changed, but yet very few people realize it. The credible threat theory that I have developed over the last few years is by far the most accurate one. It's the only one that doesn't change. It's the only one that doesn't really change. I mean, there are a few other guys out there who have some pretty good, what I believe is some pretty good theories. The dollar milkshake theory, I think, is incredibly accurate. I think that was a really good one. But to understand monetary policy itself, which is the Federal Reserve and how it is that they set interest rates, how it is that they deal with the overnight lending rate between the big banks, and how that ultimately leads into the bigger and broader economy over time, to understand how this works is by far the most important, best theory that you could ever internalize. It's the only one that gives you the ability to make appropriate decisions for yourself. Everybody else is trying to come up with this all-purpose idea on how it is that the government can conduct themselves so that everybody can hold hands around the campfire and sing Kumbaya. Very delusional thinking. It will not happen. It's great conversation. It's great debate. It's stimulating thought. But it's no real legitimate way of actually conducting yourself to understand how it is that the Federal Reserve is in their strategy, to know that they didn't screw up, to know that they are not flying by the seat of their pants, knowing that they come out, many Fed officials coming out at the same time, disagreeing with each other, dissenting conversations, dissenting votes. This creates the fear, uncertainty, and doubt that they then use against you. The Fed, said this straight up, that this is part of the policy. to have many Fed officials come out and disagree with each other. This is what we are experiencing right now. How many people are actually looking at beyond just Jerome Powell to see that the Federal Reserve is made up of many, many voting members on monetary policy? It doesn't come down to the voting to one person's vote. It doesn't come down to Jerome disagree with each other. It creates a misunderstanding that they then use. That misunderstanding, that open-endedness of what it is that the Federal Reserve is doing, can then have mainstream media narrative guiding you. Your fear, uncertainty, and doubt is then being pushed, right, into a particular direction. Oh no, worry about inflation. Oh no, there is no inflation, right? Tariffs. Oh, what tariffs? Nobody has any clue of what's going on out there, and that's exactly the way they want it. The more fear and uncertainty and doubt that you carry, the more power that they carry within their systems, within their policy. The moment that you did not have that fear, uncertainty, and doubt, it would all come to an end. In fact, the way that you end the Federal Reserve is by understanding the monetary policy in the way that the uneducated economist has tried to show you. If everybody was to internalize this and then know how it is that the Federal Reserve is using their words, using the mainstream media, and using the propaganda to then push their monetary policy, and if we were to recognize it at the time, they simply would not be able to do it and their whole system would collapse. The people who have this belief that the Fed is causing massive inflation, massive pain, massive price increases, and massive problems are literally giving the power to the Fed. They're literally giving them the power that they need. And so many people have misunderstood what it is that's taking place out there, that the Fed is actually doing quite well with their strategy. They got low unemployment. Look at unemployment on a historical chart. It's considerably low. Is it increasing? Yeah. But on a historical basis, it's not bad. And again, people can say, oh, it's far worse than what they are saying. Yeah, great. I totally agree. Monetary policy and the way that they are conducting it is based on that unemployment number, and it is low. Inflation is coming down. For people to say the Fed screwed up, and I'm looking at it going, I don't know, the Fed seems to be right where they want to be, right? They're mandated to do two things: low inflation with stable prices, whatever the hell that means, and full employment or low unemployment. Well, I don't know how many people have looked out there, but I see the inflation numbers coming down. Not that they're accurate, but the ones that they are looking at seem to be coming down. Unemployment seems to be low. Their dual mandate seems to be achieved, and people are wondering when it is that the Federal Reserve is going to move. And I'm thinking, why would they? Why would they? They don't need to move. All they have to do is elevate the fear, uncertainty, and doubt within the economy, pushing the inflation expectations higher, pulling the neutral interest rate up, making the economy less restricted, and now here we have new record highs and low unemployment. I wonder how many other people are seeing it this way. None. Literally nobody. They have pulled the wool over everybody's eyes. Everybody. And I will keep coming out here every single day sharing this with you, because this is the most accurate way of looking at the Fed's monetary policy. There is no other way of looking at it with any kind of real legitimate ability to use that information in any other way other than using the information that I have tried to share with you, because everything else is superficial or just completely fabricated nonsense. The Federal Reserve is trying to make sure that the stock market stays elevated or house prices stay elevated. Is nowhere, not one word of that has been written into the monetary policy strategies from the literally hundreds upon hundreds of speeches that I have read from the FOMC. The voting members of the FOMC, the Federal Open Market Committee, the people who vote on monetary policy strategies, do not care about politics. They do not care about the stock market, and they do not care about the price of a home. They know it's a problem. They definitely address the problem. It's not their problem to deal with. Their problem is to make sure that if somebody wants to borrow money, that there is a loan available for them. That is it. And I don't know how many people want to look at it and say, well, they're the problem. They did this. They're the reasons. Well, yeah, you're right. They're definitely a position in which that caused the events that we are seeing today. Did they do that on purpose, or does it happen to be the nature of the beast? If you have ever increasing expansion of money, you are going to have inequality of mass proportions, and you are going to find that the people at the bottom half will not be able to afford anything that the people at the top own. Well, here we are. And people want to say, oh, it's their fault. No, it wasn't their fault. The monetary system that had been developed over 100 years ago had no idea we would be rolling into digital assets. Had no idea that we would be using cell phone communications. They had no idea that we would be in a position with technology of use that we have today. 100 years ago, they did not see that. So to think that they set this system up to be this way is very naive thinking. It evolved to this. And yes, there are definitely people out there who understood how this system was evolving and positioned themselves to take full advantage of it. And when we look at that, we say, oh man, you're the problem. You did this. You're the reason. And they're looking over there going, you know, anybody could have really done this. So many people say, oh, no, man, you got it wrong. There's a much bigger elitist power out there. And I'm thinking to myself, you know, you could step yourself out of the system. You know, you could go and live like a hermit in the woods with nobody around you, no communications, no socializing, and nobody will care about you. Not the government, not anybody else. You live like a hermit out in the woods by yourself with nobody around. Nobody will care about you, I guarantee you. But the moment that you want to step up and do business, if you want to step up and be communicative, like being a community, right? The moment that you want to do anything that creates any kind of power movement out there, you will find the government involvement. But if you want to be out of it all, just go away. But if you want to step in, if you want to be part of this, if you're going to play the game, well, then you're going to have to understand that the separation between the rich and the poor is going to continue so long as we have government involvement. Because the government can't do anything. Literally cannot do anything unless you are an industrious person first. So you step up, you start creating an environment for yourself that's going to be a better one. You guarantee there's going to be somebody out there saying, you've done a little too much. We're going to have to take from you. Why? Because there's people out there who aren't doing anything, and they're going to riot and beat us all up if we don't do something for them. That's the situation we live in? You bet it is. That's exactly the way it is. To understand that there's nothing you're going to be able to do to change the minds of anybody out there to make it a better environment for you to operate in. That doesn't work like that. It just doesn't happen. Right? And we can wish and hope and dream and pray and have a stimulating conversation and debate it all day long. It still ain't going to do anything. The day that we recognize what it is that's happening out there, to say, you know what, I'm not listening to any of these people anymore. I recognize something different that's taken place, and I'm going to go forward with the data and understanding that I have collected from my own research. And I believe that this information that I have gathered is going to give me the best opportunity for my existence out there. And once you start stepping into that sort of energy, I guarantee you all this stuff starts to become a lot less noisy. You start looking at your own efforts as being the correct ones. Your confidence starts to increase. You look at the playbook that they are putting out there and you think to yourself, man, are they serious? Is this seriously what they really want to do with the economy, with the government, with people's, lives out there? And you recognize, it's like, I don't need to fall into that. I don't need to fall into any of this stuff. I can conduct myself in a way that is different from everybody, and I don't have to listen to anybody else out there. All these people who are like, man, the Federal Reserve is going to be cutting interest rates soon, and I'm thinking to myself, So So what? What do you think that's going to mean to the economy if the neutral interest rate falls? Because the very next question you should be asking yourself is, where is that in relation to the neutral interest rate? So few people actually do that. Most people, 90% of them, including most financial advisors, have no idea what the hell they are doing. Literally none. They think they do. They think they have the appropriate, information. They believe that they are doing it the correct way because that's essentially the way they were trained and taught and live life. But when you realize that, nah, the whole monetary policy had shifted, had changed, and that they use this communication to guide people's expectations in order to raise or lower the neutral interest rate while they remain still, you take on that sort of strategy, which is absolutely mind-blowing to most people, all of a sudden it becomes very accurate and very clear on why it is that we are in the position we are in. Right? There's a huge difference inside of it. What time is it, guys? I'm 21 minutes into this, and I had some errands to run, so I'm going to have to cut this video a little shorter than normal. There's a song, "If I'm the problem, you might be the reason." I've come across lots of people sitting and waiting. I've never seemed to catch up. Do you as you believe best? Yeah, and that's really where I think it's just kind of incredible, because I have shown many people, like even people who are close to me, the people I work with, I'm like, hey man, download Robinhood or download this Cash App. Look at this particular thing, dollar cost average into it, and I show them exactly what I am doing. Right? And now this isn't like, I'm not putting so much money into this thing that people like the average person couldn't do it. Right? Like Coinbase stock, I believe I put $1,300 into that stock over the course of like 2 years. Right? That stock right now is worth over $5,000. Like it's up 300% dollar cost averaging into Coinbase. Super volatile stock. I mean, I think the lowest that I purchased that stock was like somewhere around $35. Right now it's trading at over $350. Okay. Simple little tiny purchases, $50. Didn't even hardly notice it. Right? How many people go out there and spend $50 on lunch, $50 at the bar, $50 on some little stupid thing that they purchased that they don't even really care about? How many of these $50 purchases are made over the last 2 years that could have been going into a stock that is now worth 300% more? How many people have this sort of mindset? Very few. Like, I shared it with tons of people. I don't know a single person who did it. All right, maybe some of the people here on YouTube who were listening to me when I was talking about how it is that I was building that up a few years ago, maybe a few people took advantage of that. I'm not telling them to take advantage of it. I just suggested it, but I don't know anybody who did, or even did something else. I put it into some other kind of item, or stock or whatever. I know a couple of the guys who are now purchasing silver, which is good. I mean, it's a great position to be in. But if you're only buying one 10-ounce bar and that's it, well, that's a cool little novelty piece to have, but it's not going to have any kind of real benefit in your life as an insurance policy or, idea of enhancing your investment portfolio or something like that. It's a very small and literally insignificant amount. It's very significant in the energy and the meaning behind it, but in the actual overall scheme of things, a 10-ounce bar is a very small amount. Right? However, you buy 1 ounce once a month forever, well, you ended up accumulating quite a bit over a lifetime. Right? Because I guarantee you, if you're buying 1 a month, there's going to be some months where you buy 2 or 3 or even more. Right? And you start building up that, you start stacking up that silver holdings, and you end up with a really good insurance policy that ends up giving you the ability to not stress about a lot of things that you have going on in your life. I used to stress about paying bills, but when I had a box of silver, I didn't really stress about paying the bills. I had, pretty much anything that I needed in case of an emergency sitting in that box of silver. And when I had a car go bad on me and I needed ride to work, it was that box of silver that saved me. It's a great insurance policy. And stacking to it once a month or, a couple of times a month is a very simple way of building up a portfolio of wealth that gives you a security that's outside of that third-party claim. I don't know why more people don't do it, but very few I know do. All right, where are we at? 25 minutes into this. All right, I'm going to give it 5 more minutes and call it quits. Too many boomers with retirement for dollars to go away. All right, the real problem people have when they retired decades ago, in that buying power of that money has lost significant buying power. But if you continue to work and earn newly inflated money, at least you'll be earning money at inflated value. All right, cousin Sheila and her new hubby Boo won't be wasting La Plata when they marry in Reno next month. They're getting hitching at Buffet and then going to the Roach Motel. They'll be doing Adderall bumps. Okay. Whatever. All right. Start with basics. Pay off your vehicles. Pay off your house. Have some guns, ammo. Get some precious metals. Then start with stocks, crypto, etc. Yeah, that's absolutely true. Like if you are trying to figure out where it is that you need to invest money and you have debt, boom, there it is. That's where you invest your money, is to pay off debt, because there's no better investment than to pay off your debt first. Like literally there's not, especially if you have high interest debt like credit cards or something like that, because you have to think, like if you have a credit card debt, even if it's like a low interest credit card debt, like, you know, say 15% or something like that, you have to have an investment that pays far beyond the 15% to make it worthy because of the interest that you're paying on your credit card. So might as well just pay off the credit card. That is the best return on your investment. And then once you are out of debt, then start moving into stocks and bonds and crypto, like you were saying. However, I do feel that even if you are in debt, building up a silver position is still a good idea, right? Even while being in debt. It's going to take longer to get out of debt, and it's probably going to end up costing you to do it. But having that security of even having, like, say, 50 ounces of silver, which is a lot, you know, for an individual person to go out there and acquire. But if you have like 50 ounces of silver, generally most like utility bills that come up, you would be able to cover, or a car payment or rent or something of that nature, depending on how much your rent is. So in that position, if you were to have like 50 ounces of silver, that's like an insurance policy away from that third party claim. This is going to give you the ability to sleep at night, to have a little bit more comfort. And I think that that is a good position to be in, even if you are in debt. Okay? Now, granted, it's going to cost you to do that. It's going to cost you more than paying off the debt first. But that relief, that feeling of security that you get from it, I think it's worth the money, right? That's me personally. You might be different with that. But if you have, like, you know, at least some position in silver that gives you that comfort, that insurance policy, then definitely pour into paying off debts. Like, I personally have a little bit of credit card debt because I put my son's braces on a credit card. And I thought I was going to pay it off by now, but you know how it works, right? Life gets in the way. New set of tires came up, you know, all these other things that started, you know, happening that prevented me from paying this damn credit card off early, or earlier than now, right? But here it is, I'm getting closer and closer to getting this credit card paid off. At the same time, I have been investing into stocks and bonds and cryptos and stuff like that. So I should have had this credit card paid off a lot earlier than I did. And that ended up costing me. However, I do have that goal that I was trying to reach for, which was $100,000 in liquidable assets. I was like so focused in on that I kind of let the debt, you know, be there as I was trying to accumulate, like try to achieve this goal. But now that I'm there, it's going to be all into getting that credit card paid off, which I should do here fairly quickly. And then I'll be back into the investments again. But that's me personally, how I've done this. I don't look out there at the stock market, or look out there at the environment, or look out there in politics and say, oh, now's a good or bad time. I don't do that. I don't say now is a good or bad time. Because when you dollar cost average, it doesn't matter, right? Some days you're going to be buying at $35 a share, and other times it's going to be $350 a share. But if you're dollar cost averaging, it doesn't really matter, because you're just trying to accumulate over time. And that average price that you end up paying, especially if you are buying in at the lows, you are going to find that that average price is probably going to end up being so much lower over time than what the actual current price is if you picked a good stock, one that's going to be growing over time. That I don't know why you would want to do it any other way. Trying to time the market is difficult. Like, very few people can do it right. Yeah, some people are really good at it. Like, they just know. Like, I mean, some people are just good at doing things, right? Other people, like myself, like I'm not very good at market timing. Right? I mean, it was just like, I would love, oh man, now's the low, and then it goes even lower. It's like, oh, I dumped all my money in already. Dollar cost averaging, you don't have to think about it. Just pick a stock, and you're like, hey, there's the one. If it drops significantly, maybe increase your purchases that month just to, add a little bit better position to the average, to lower the average. But you're not really caring what the price is. You're just looking to make that regular purchase and accumulate keep stacking it up. Alrighty, guys, this was fun, but I gots to go. Uneducated economist, you let me know.